Let's go straight to Ed Boyd, who's outside the Reserve Bank headquarters. He's not long out of the Reserve Bank Governor's press conference. Ed, the Governor just wouldn't be drawn on future rate cuts, but she sure knows the market is factoring in more, isn't it?
Ross, the market's factoring another 3 rate cuts by the midpoint of next year. So the market's very bullish and are hoping that the Reserve Bank cuts rates 3 more times. But Governor Michelle Bullock was asked numerous times about that and the market pricing for rates, and she was trying to brush it all off. But just taking a step back, today we did get the first rate cut since November 2020. Cash rate down to 4.1%. It was a packed press conference. It was the busiest I've seen since the first press conference of last year, which was Michelle Bullock's first as Governor of the RBA. So the room was full. Virtually everyone got a question. There was more than 20, 25 questions asked. But the one that kept popping up was this market pricing, Ross, of where rates are likely to go in the future. The expectation from markets is rates will be cut 3 more times. This is Michelle Bullock's response, though. She was asked whether the RBA is one and done, as in, is this the only rate cut Australia's economy are going to see in this current cycle? Take a listen.
The market is expecting quite a few more interest rate cuts to the middle of next year, about 3 more on top of this. Whether or not that eventuates is going to depend very much on the data. Our feeling at the moment is that that is far too confident that that's as many rate cuts as we'll be having. So I can't say one and done. What I can say is that we've done one, we've removed a bit of restrictiveness, we are still restrictive, and we are waiting for more evidence that we're getting inflation sustainably back in the band before we are willing to move again.
So the interesting part about this, because they put out new forecasts today too, economic forecasts, is this drifting down of inflation while maintaining pretty full employment.
Yeah, Ross, look, the economic forecast came out in the Statement of Monetary Policy this afternoon. A bunch of journalists were actually in the lockup and they got to read the SOMP for about 2 hours before it was released. But as part of that, they weren't told which way the cash rate was going to be going. And they all actually thought the Reserve Bank would sit on its hands today and hold rates after reading the SOMP and reading its economic forecast. They all thought it was very hawkish. So all these journalists were very surprised when they saw at 2:30 the RBA was actually decided to cut rates by 25 basis points. But remember, Ross, the Reserve Bank has been on this narrow path. It's been a little bit of an experiment whereby they haven't raised rates as aggressively as other central banks around the world as they attempt to hold employment at low levels. Remember, unemployment is still at 4%. Australia's economy has performed pretty well comparatively to its peers. The RBA didn't lift rates as aggressively as well. So I asked Michelle Bullock in the press conference just a short time ago whether this new narrow path policy that she's been undertaking, along with Phil Lowe, her predecessor, has been a success, and whether it could potentially become a new way for other governors of central banks around the world to manufacture their monetary policy in the future. Take a listen.
We have a dual mandate. We have employment, as does the Fed. Other countries don't necessarily have that. So it depends. It's not necessarily a strategy for all central banks.
Ed Boyd at the Reserve Bank, many thanks.